Welcome to the Stock Market Daily News Podcast. It's Monday, December 29th, and I'm here with your rapid wrap-up of yesterday's market action and the key headlines for investors. U.S. markets closed out the last full week of 2025 with all major indexes eking out modest gains. The S&P 500 edged higher, the Dow Jones turned positive late in the session, and the Nasdaq notched a new near-term high. But the rally that powered much of this year is pausing near record levels as traders weigh sector rotation and a shifting policy backdrop. Coming up, why small hedge funds outperform the giants in 2025, what analysts are predicting for 2026, Indian small caps defying gravity, and a look at active versus passive strategies as we head into the new year. First up, in a year of robust gains, it was small hedge funds that stole the spotlight. According to Pivotal Path, funds managing less than $100 million returned 14.6% through November, outpacing their larger rivals. Smaller funds thrived on nimble long-short equity strategies as the S&P 500 rallied 18% and the Nasdaq soared 21%. Their flexibility to target under-the-radar stocks proved to be an edge. But with markets near all-time highs, some analysts warned that the outperformance streak could be tough to sustain into 2026. For investors, the takeaway is that size doesn't always mean strength, especially in unruly markets. Looking ahead, market strategists are sounding a cautious note for 2026. Expectations are high, but so are valuations, especially in the U.S., leaving little margin for error. Carl Prevost predicts both the S&P 500 and Canada's TSX 60 could finish the next year flat, within plus or minus 5%, after 3 years of big gains. Volatility could rise, especially if inflation comes in hotter or policy surprises rattle investors. Bottom line, after a historic run, traders should prepare for more choppy waters and fewer easy wins in equities. Turning to India, while broader indexes consolidated, small-cap stocks powered higher. K&R Rail Engineering jumped over 34% for the week. Jupiter Wagons and Sasken Technologies both posted over 30% gains, defying the subdued tone across major benchmarks. Despite continued foreign fund outflows and thin year-end volumes, domestic flows and strong earnings kept the market's foundation resilient. For investors, the action in small caps is a reminder that hidden gems can appear even when overall sentiment looks cautious. Meanwhile, active managers are gearing up for a pivotal year. With wide differences in company earnings and valuations, Sunil Sharma of Ambit Global says active investing could outshine passive strategies in 2026. His call: focus on bottom-up stock picking, tap into themes like financial services, industrials, and tech, and balance allocations across asset classes. As sector performance disperses, selective investing could be key. And finally, all eyes are on the final trading days of 2025. The Nifty and Sensex in India remain in a consolidation phase, with analysts watching the monthly derivatives expiry, fresh macro data, and FI activity. U.S. traders await year-end economic reports and the next batch of Federal Reserve updates. Any surprises there could drive the new year's opening moves. Quick recap. U.S. stocks stayed near highs, but flagged some caution. Small hedge funds delivered outsized returns, Indian small caps outperformed, and active strategies are in focus for 2026. Looking ahead, watch for more economic data and the last trading sessions of the year to set the mood for January. For more daily updates, don't forget to subscribe and join us tomorrow as we track the market's biggest swings.